Hi, this is TradingETFs.com with an ETF update on January 12th, 2016. And I wanted to provide an update on my video that I did on January 4th, talking about the IWM and also the Diamond ETF, the DIA. And on January 4th, I had posted a video showing that we were here on that day with the long-term oscillator. And I had mentioned that momentum was gaining to the downside, and you can tell that by the amount of gap between this closing day and the next day on January 4th. And I had said that momentum was gaining to the downside, and it looked to me as if we were going to see the IWM move all the way down to the 107.50 or 107 price range. And so I wanted to update you to show that we did in fact continue to the downside here in the LT oscillator. And you can also see that not only did we get to that 107.50 and 107 price range, we completely shattered that and didn't stop going down until we were down here in the 103.50 range. And you can see that even though we've come down that far, these gaps are still widening. There's still a big amount of space in between, which means closing price on the 11th is still widening today on the 12th, even though we had a little bit of an up move. And so there's a lot of technical damage that's occurred in the IWM, and at this point we may get a little bit of a bounce here over the next couple days, but to me it appears as if the downside is still in play. It doesn't look as if IWM is done going down. And I'm shifting over to the short-term chart, and you can see here that I was previously talking about getting to this oversold reading at the negative 0.00225 area, and we didn't even hesitate we didn't even try to stop there. We completely continued on to the downside, and even though we got a small move to the upside here, our oscillator on the short-term oscillator is moving up, alleviating some of the short-term oversold reading in the oscillator. But it's even if we get the price to move up another dollar or two, maybe into the 105, 106 area, it's going to take our oscillator somewhere into this range here, possibly closer to the zero line. So there's going to be plenty of room to the downside once this relief rally is over. And so it still appears to me like we've got more downside coming. And let me switch over to the Diamond ETF, the DIA, and we'll take a look at that and where we were discussing, or what we were discussing on January 4th on what the oscillator may do and what the price may do. So you can see here on January 4th, I had said that we'd been basing right around the zero line. We had a big down move. That was this day here, the down move. And I had said that very rarely would you see the oscillator moving sideways above the zero line, having one big down day, and then that would be the end of the decline. I said that that just doesn't happen very often. And sure enough, we have continued to break down and move way down below the zero line. Now, I had also said that it's not unusual to, once we break the zero line, to bounce up and try to retest the zero line. We didn't even get that. We had no type of move to the upside. And so here we are back down at the 163 level. On January 4th, I had said that if the oscillator continued to move down below the zero line, that momentum would then be accelerating to the downside, and we can see the 161, 160 price range. We got to the 163 price range, and now we've had a little bit of a bounce here for 2 days. But again, you can still see that the long-term oscillator is still pointing down, even though we got these two up moves. So it still appears to me like a massive amount of damage has been done to the market, and we're seeing this relief rally, but all it's going to do is alleviate the amount of oversold readings on the market. You can see here that we've had these two up days, and our oscillator is now moving back up on the short term. But once we finish this relief rally, which we may get another dollar or two, once we finish this relief rally, then you're not going to have the oversold reading any longer. And if the market turns back down, which is what I expect it to do, then you're going to have the market have plenty of room to the downside once again, because we're alleviating the oversold reading on this oscillator in this up move that we've had. So again, a lot of technical damage has occurred, and I just wanted to give a quick update and compare the chart from January 4th, and it's moving as expected. And so I will continue to give an update when I see something that really needs to be shown. Right now, like I said, we're getting a relief rally. It may continue on a couple more days, but then I expect it to lose momentum to the upside and be in position to turn right back down again. And in that case, we most likely will not just get to the 160 area. We will most likely continue on below that. So I'll give an update if I see that we are running out of momentum to the upside and starting to turn. And then we'll take a look at where we can go beyond the 160 level if we start moving back down again. So that's about it for the update tonight. And I will update you, like I said, as soon as I see something that needs to be updated. I do want to add that I've looked at over 1,800 ETFs, and I am not finding any that right now are in position to be bought. There are some setups. There are some that that I'm watching that we need a few things to happen before we can take a position. But it is definitely not a good sign when out of 1,800 ETFs or thereabouts, you can't find, or I can't find, a couple to look to enter a position on. So we will just continue to watch what develops here, and I'll continue to update you as I see things move. Thanks very much. Have a great night.